All right, Herwig. Well, we're at that time in the episode where we can dig into our main topic a
All
little bit.
right.
Main topic this week, as we mentioned, is our predictions for 2020. So we may have a couple things that we try to keep practical. Maybe have a few hot takes there to just kind of go out on a limb and see what happens. But Herwig, I'm excited to hear what are your predictions for 2020.
Last year we had the chance to review 2019 in episode 23, as you said, but we only started the show in June. So we actually didn't get the chance to really do a prediction at the beginning of the year. I think it's fun that we get to do this exercise. We may find that we are, hopefully actually accurate because we do understand and are plugged into the space, but we may also find ourselves a little bit laughable when it comes to some of these hot takes, as you say, Kyle. We'll see. Hopefully we keep it interesting. And of course, we always love to hear your predictions and feedback. So reach out to us on Twitter, LinkedIn, or even via email with your feedback and your own predictions. We'd love to hear them. For me, I've got a couple across the board here, starting, of course, with legal clarity, specifically from the USA. I'm expecting that this year we will see some kind of legal action passed, whether it be via the Cryptocurrency Act of 2020 that we had discussed, whether it's actually a regulatory response by the SEC or the CFTC, or even if it's going to be a different bill that has yet to be even introduced to Congress. I know we're going to see something in 2020 as a result of both China, Libra, and demand from the industry for some kind of legal clarification here. And when that does happen, Kyle, I do believe that this will be a major revival for both the crypto and blockchain industry, and will act as a signal to the world that the U.S. is and will remain very active within this space. And I believe that's the message that they'll be trying to send with that. I think we're all hoping for something like that. An increase in those crypto markets is certainly sought after, I know, by many in the space. Next prediction that I have, Kyle, is I believe that specifically over 100 different private markets and exchanges will come about to help create liquidity for tokenized securities, either by managed through these third parties like private broker networks or exchanges with ATSs, or more likely by the issuers themselves. In fact, I think probably close to 70% of them will be issuer managed, and the remainder will then be facilitated through these marketplaces. And I only would acknowledge this because security token technology makes it easier to manage your own market, and many companies will not be ready to give up that price control per se to get listed on a third party in exchange for having that liquidity that if you theoretically list on an exchange. So I believe we're going to see both private and sort of these exchange markets arise. And on that notion, I believe we'll see sort of one of those examples of one of those private issuer managed markets be one of the very first tokenized employee stock option pools, or TSOPs, in the $50 to $100 million range. So, this is truly a real private market of size and demand. And who knows, maybe those tokens will even make their way onto third-party exchanges. Of what's getting tokenized out there, Kyle, I think bonds will be the most tokenized asset, and that's only due to the enterprise usage by banks. We saw the end of the year, we saw the Bank of China issue a $2.8 billion bond. We've seen several bonds get piloted and tested by some major banks across the world. So that is my expectation that will be the largest source of tokenization. But real estate, I think, will become the second most tokenized and actually the more actively traded asset on accessible marketplaces that aren't exclusive to the banks. And because the bonds that are being tokenized will be more for transparency purposes and for an improved efficiency between banks, not necessarily to create third-party liquidity with outside parties, but real estate surely will take advantage of that primarily. And if I have to put some numbers to where my mouth is, I'd say that next year, Kyle, I think we're probably going to see over $10 billion in primary tokenizations, either of STOs of new security issuances or taking existing assets and tokenizing them. And I believe the secondary market will grow, and we'll use the data behind STM as our sort of benchmark to surpass what I believe will be over $1 billion in market cap. But I do believe that the actual trading volume, Kyle, is going to be less than 5% of the total market cap. We're talking about roughly 50 million in total trades, and I think that's simply consistent with what we've seen already on based on STM's data here. That you have of the assets that are trading, you don't get daily turnover. So the chances are that we're going to see very, very active markets, like say in the cryptocurrency space. I don't think is the case. I think it's going to be closer to what we see in the public markets, if not worse, because we're talking about traditionally illiquid assets. I don't think that there will be adoption of any one major protocol. As you just mentioned, yet another one today with Mount Pelerin. There are dozens of protocols out there, and many of them have a different focus, whether it be by asset class or by feature or simply by blockchain and the technology that they offer, and simply that it's too soon for one protocol to sort of become majorly adopted. The reality is, because I think we're going to see a lot of different exchanges, as a result, we're going to see a lot of different exchanges support a lot of different specific protocols, and there will be some protocols that are very specific on a specific type of asset or security, while others focus on broad adoption. And as a result, it's going to be a continued race, I believe, at least for the next several years, before we start to see some major token protocols become a mainstream standard, if you will. And to say kind of something provocative on that is, I believe that there will be no major investment banks to jump into the space in 2020. What I mean by that is we obviously have seen a lot of big banks already participate, but when it comes to the major investment banking divisions of, say, Goldman Sachs or JP Morgan and the like, they are not going to be issuing or brokering any security tokens, at least until there is a more proven market and really a more monetizable demand that exists for them to pursue, which I believe it currently does not, and nor will it show itself in 2020, but perhaps certainly in 2021 or the years after. I don't, however, think that means that there won't be any publicly tokenized traded stock. I do believe we're going to see the first suspects appear, whether it's an example of the overstock dividend that has been trying to get released, whether it's the INX IPO that Kyle has given some good coverage on before, or whether it's the Provenance blockchain protocol, which Mike Cagney, the founder, has mentioned previously before that they have considered going public in order to create a highly distributed blockchain protocol. But it might, of course, also be a company we've never even heard of yet. And just to finish up a couple more of my predictions here, Kyle, we will also see, I believe, a major hotel chain explore tokenization, either by doing a securitization of their portfolio of properties, whether it's by issuing debt against their portfolio to raise money and utilize, or if it's actually tokenizing specific upcoming construction projects for new institutions and others to participate into. I'm not talking about a boutique. I'm not talking about a marquee property. I'm talking about an actual major hotel chain looking at this from a major game-changing perspective. I also think, speaking of Provenance a little bit earlier, that we are also going to see the first securitization of loans that are all completely originated on-chain from Figure specifically next year. They've already lent $750 million to date, all originated on-chain. That is a healthy securitization size. They have no signs of stopping. And I know that part of the value proposition that Mike Cagney is bringing to market is, of course, efficiencies within securitization. So it only is an expectation that he's going to want to prove that with his portfolio here. And I believe that we're going to see something that as soon as this year. And finally, my last prediction for 2020, Kyle, is that security token infrastructure companies, which we've been tracking quarter by quarter, how much they raise in acquisitions and the like, that they're going to raise over $200 million next year. Specifically Q2, Q3 being the focus of that as companies start to seek their growth rounds, as the industry starts to show real promise and growth.
I can see that.
So I have a bunch there, Kyle. We have these written down and marked down. I'm certainly hoping to be right on all of them, but I don't expect such the case to be. I'm looking forward to reviewing it at the end of the year, but I also want to know, Do you find any major ones that you disagree with me here? Or are you mostly on the same page? And I know that you have a bunch of predictions that I'm sure are on a similar level, so I'll go ahead and hand you the mic here.
Yeah, we certainly have some that I think are relatively overlapping that we can dig into a little bit later. The one that I think I love that may or may not happen in 2020, that I hope does, but is something that I could see being a maybe 2021 revolution is the ESOP plan. I love TSOPs, I love ESOPs, but I think that that's still really early for a company to feel confident enough to actually issue that. Again, I hope that they will, but that's one that's like, I feel like we did an episode on TSOPs, tokenized employee stock option plans or pool, so definitely go check that out if you don't know exactly what we're talking about. But essentially, with an employee stock option plan, you've got all of your employees that have some shares. If you can tokenize that, then you can have you have a much better ability of paying dividends to those employees, of being able to manage all of those shareholders, of being able to possibly even do some kind of governance, as well as regionalized profit sharing, so many other different things, maybe even secondary liquidity for some of those employees. Or collateralized loans based off of their stock. There's a lot of great options you can do there, but I'm not exactly sure when that's going to happen because it is very ambitious. But I love it. I love it. I love all of your other predictions here. I think that the $200 million figure for infrastructure I think is very fair. I think that that's definitely one that I'm looking forward to. I have a similar kind of number that I'll be talking about in my predictions, and the rest I think you've done a great job. I'd love for all these to happen. But moving into mine, I'd love to get your feedback on mine too. The first one I actually started at a similar note with the fact that I do also think that regulators in the U.S. will draft some kind of regulation surrounding stablecoins and at least specifically crypto securities, which is the wording that they used in the Crypto Securities Act or whatever that one was called we talked about before. And I think that they're doing that because they need to provide additional context when dealing with a lot of these tokenized assets. I also think that this will be driven by Libra's attempts to launch, just because Libra and Facebook obviously have so much pull and there's been so much government pushback and regulatory pushback that they will feel the need that they need to start really defining what is and what isn't allowed. However, I'm a little bit more conservative than your original prediction in the sense that I'm not sure if it will get passed in 2020. I think that certainly something will get drafted and maybe go to the House. But whether this actually gets passed or whether it continues to be a work in progress until 2020, I can't say with any certainty. I do say in 2020 that I think that whatever they do draft, I think it's more likely than not that regulators will err on the side of defining a much wider basket of assets as securities, regardless of if there's an argument for them being commodities or underpinned currencies. And so the example here is the Stablecoins Act that a lot of people haven't been psyched about, where essentially there was a rumored bill being drafted that proposed by, I think, a few senators that essentially suggested that all stable coins are securities. And many people felt that was not fair because a stable coin, by definition, shouldn't be something that you'd expect to appreciate in value, and it also only hampers the ability to use this thing as a currency if it is considered a security. However, I do think that they'll likely be a little bit more cautious than not. It seems like that's the path that they want to take. Whether cautious in terms of not including or not being quite as inclusive, or taking their time. It's going to be one or the other. They're either going to wait till 2021 or 2022, or they're going to define more things than not as securities and then maybe over time roll them back. But I just can't see them coming out with like super crypto-friendly laws yet. We'll see.
Would you define Cryptocurrency Act of 2020 as friendly or as wide?
I would probably define that as friendly. I think that I would love for that to pass, but I find that to probably be a little bit more friendly than what I'm expecting. And if that is what gets passed, that would be fantastic in terms of defining crypto commodities and defining cryptocurrencies.
Love that.
I just
don't think it's going to
It's hard for me to see it, especially because crypto commodities was their definition for ICOs and of the like, and many of those really I don't think deserve to be anything other than unregistered securities. And so that's why I do think it will be hard for that to pass, especially with how much pushback there's been for Libra. If this thing actually picks up some momentum, I think that those same critics of Libra will likely raise their voice to that as well. But we'll see. There's always so many opportunities, and especially I think that if other jurisdictions lead by example and maybe pass different regulations or maybe larger financial jurisdictions like the UK or Germany, some of these larger economies, if they can pass very friendly crypto securities laws, potentially that will encourage the U.S. to be a little bit more open-minded. But when they have the ability to be the leader and define it how they want it, I do fear, to a little bit of a degree, that they'll be a little bit more hesitant to acknowledge some of those things as non-securities. But considering we're in security tokens, we spend all of our time working with securities. If they can give us any legal definition for a security token or a digital asset that is created based off of a underlying real world asset, I would be psyched. So I think that's still super positive.
This is a topic not about what we want, Kyle. It's about our predictions for 2020. So you have to keep it clear.
All right, moving forward, institutional debt and fixed income securities will not be available on public markets, unfortunately. I think that they will still be insider institutional deals, but I do think that many of these debt securities will be fully originated on the blockchain, which paves the way for future public access. So I think in 2020, you're not going to have access to the Franklin Templeton tokenizing however many billion of their assets. I don't think any of those things will be available to the public. I think they're going to be very institutional, very, very tightly knit, partially because they just need to test it. They need to see how this thing functions on a low volume level between institutions of high volume to cover the costs, right? It needs to make sense for them on a small, small in terms of volume, but high transaction size deals. I think that's what it's going to look like in 2020. And then maybe in the future, they will offer more public issue debt options. Moving forward into something a little bit more positive, because those first two weren't quite in that direction. I do think that Spencer Dinwiddie's Dream Fan Shares platform, we talked about this before, which was the issuance platform that tokenized his NBA contract, where investors could invest actually in his performance-based incentives, which if you were investing, you would actually have seen a very successful investment because he's been playing great. I think that Fan Shares platform is going to tokenize 5 new tokens in 2020, with 3 in the NBA. He's going to get a couple more NBA players because we did hear that a lot of NBA, there was a lot of player interest in investing in this token, which is exciting. And so I think that many of them will be interested. I think there's going to be 1 in the MLB, as well as 1 that's in the entertainment industry. So I think he's actually going to successfully be able to branch out from sports and be able to tokenize some kind of entertainers' rights to future profits or something along those lines in terms of maybe their writing credits or their royalties or something along those lines. I think that we will see a musician or an actor or something successfully implement this strategy as well. I see the tokenized rental properties industry is going to explode into I'm going to call it $100 million industry by the end of 2020, because for the first time, investors all around the world will have the ability to diversify their mortgages across properties all around the world, which allows them more price stability because they no longer have to rely on their specific property's value increasing or decreasing. Allows for risk management because you can invest not only in your local area, you can invest in your entire country or in other countries as well to help prevent risk, as well as perpetual income. Because if you're taking a piece of your mortgage or whatever and selling it and then buying into some of these rental properties, even after you've paid off your mortgage, you're still getting that rental income from the properties that you diversified for yourself. So you do get perpetual income in that scenario as well, and I think that that's going to be a very attractive investment offering for many investors, especially at the prices that we're seeing, where you can pay $60 or $100 to buy a share. It's manageable for most people to throw some money into that and get that perpetual rental income. So I think that's going to be a fantastic use case and one that definitely blows up. We saw Bitbond is launching a similar strategy as well. We already talked about Realty doing this. I think they've got 4 properties now, and I think this is only going to increase in 2020. I also think that on-chain origination will allow for mortgage-backed securities and many other securitization products to thrive. And so when you hear mortgage-backed securities, your alarm bells should go off, and that's understandable. The main reason why that happened is because there was a lack of transparency of the underlying collateralized mortgages. And so with blockchain origination, I think that we will have the ability to have full information transparency, which removes the risk of that third-party fraud, because anyone can look at a portfolio of loans and be able to analyze based off of many of those statistics in terms of how much that person is making, how much the property's worth, what's their down payment, what's the mortgage, and be able to actually evaluate what that property looks like and how much that thing actually, what that risk profile looks like. You're going to see blogs that pop up of people just analyzing this stuff. You're going to have paid reports that you can buy that really dig into this stuff. And you're going to have that accountability that we didn't see in 2008, where all you had was these rating firms that just spent time trying to stuff their own pockets. So I think that mortgage-backed securities will be very successful as long as they're properly structured. While these will be successful, I do think that under collateralized loans and lending vehicles that are secured by improper or highly correlated assets are going to be very unsuccessful. So I think that there's going to be a lot of buzz on under collateralized loans, which is maybe something that we did see in 2008 as well, when you saw the ninja loans where it was no income, no job loans, or when you see securitization of a product by another product that's highly correlated. So when one goes down, the other one goes down. So it's not really insured by anything, because if it fails, you don't have anything to back it up with. I think that some of those potential options they're attractive for people because they're the cheapest and they're the most widespread. It's much easier to find correlated assets to secure to a debt product. But I think that that's very taxing for the economy, and I do think it will be unsuccessful. Hopefully unsuccessful meaning no investor interest, but potentially there will be people that lose money by participating in those products. We also have my numbers on the issuance size and the market size. I think that security token issuance will surpass $500 million in 2020, while I do think that the total trading volume is not going to reach 15 million, which is about 2.5%. So I actually think that while the industry will explode in terms of tokenized assets, the secondary trading volume is still going to be pretty low. One reason, and the first one that came into my head, and what I still believe why the trading volume is going to be low is actually due to token lockup periods in the U.S., where U.S. citizens that participate in a Reg D offering actually have to hold their token for 12 months before they can exit onto the public exchanges. And so once we see those assets get tokenized and then those investors get to wait 12 months, then they'll be able to participate in secondary markets. So I think that in 2020, you're going to see a huge increase in tokenized assets, but because these investors are locked in, they actually won't be able to sell them until 2021. Therefore, the secondary market will stay relatively small until 2021, in which case all of these assets can actually hit secondary markets. The only other situation in which it's more successful than that in 2020 is if we see more clarification on the Reg D and Reg S exemptions, because if you're aware, Reg S is for international investors, Reg D is for U.S. investors, and Reg S, they actually only have a 6-month lockup period as opposed to a Reg D. And a token, if you're raising for a property or raising for an asset, you can do simultaneously a Reg D for U.S. investors and a Reg S for international. And so it doesn't make a ton of sense that international investors get to sell 6 months before the Reg D U.S. investors. So there's potentially an opportunity where the SEC, who has solicited feedback in the past and we have provided to them on this specific rule change, there's an opportunity for maybe them to clear that up, in which case this prediction could be lowballing it. But regardless, I don't necessarily see that happening, and I do think that it will be low until 2021.
Let's make it clear and consistent for the users, Kyle, for our
Do
listeners
it.
here.
Clarify it.
You need to put your money where your mouth is when it comes to a primary tokenization number. Because it sounds like, I don't know what you mean by security token issuance of 500 million. Do you mean 500 million will be trading on secondary market? Is that a market cap? Is that a tokenization number? Those are all very, very different.
I think there would be $500 million in assets tokenized publicly. So that because there's a lot
What
of.
does that mean?
Well, there's a lot. It's a great question, and maybe it's not specific enough. But there's potentially so many of these deals that are happening behind closed doors that we don't have access to, and we can't necessarily account for any of those deals, that we have no familiarity in what they're looking like. So I'm going to say that public security tokens are going to be able to raise $500 million in 2020.
So you're
So
saying
via Reg D, Reg S, they're going to successfully raise from the public $500 million for securitized
you're
assets.
saying STOs.
Yes.
Now, what about secondary sales of existing assets?
Yeah,
So you're saying if I had
to.
to equate it, right? I'm saying there's going to be 10 billion in tokenization. You're saying there's 500 million.
Right. Yeah, well, it does seem a little bit low, but let's go with it. That's my numbers. So
I'm just making sure that we got your numbers clear, Kyle.
it seems low now that I think about it. But I might bump it up just to the flat 1 billion. I think that there's going to be $1 billion in tokenized assets, including both STOs and secondary sales of those assets.
And you noted earlier in the episode today, there's currently a 58 million total market cap size. At one point in time, it was actually twice that. What would you say your high for the total secondary market cap, and we're going to again use the STM data as our benchmark, would you say for 2020?
So are we going to say the high at any point in 2020?
At any point.
Interesting. I think that the high of the market cap for security tokens in 2020, it will hit. I think that the high of the public market cap will hit 500 at some point in the 2020. I'm not sure if it will close there, but it will hit 500 million at some point in 2020. Write that down.
We got it.
How about you? Did you define that already?
I did.
What
My
did you
number
say?
is 10 billion in tokenization, and it is $1 billion in the secondary market
Great.
cap. And your volume you mentioned was 15 million. So roughly of the $500 million market cap, about 2.5%. I was saying roughly 5%. So
Great.
I guess if you want to compare, I'm a little bit more optimistic on the size of the market as well as the overall volume. But now that we got that clear, I know you have a couple more predictions for us.
No, just a few more here. I think I got two left. The first one here, the penultimate, if you will, is that exchanges will begin to specialize in specific asset types in order to maximize liquidity for their investors. And so what we've seen today is that exchanges will say, oh, we'll take any asset, we can trade anything, doesn't matter what it is as long as it's high quality. And I love that theory, and I love the ability to be able to trade anything. But I do think that the reality is that generalist exchanges will struggle to provide the tightest bid-ask spread compared to specific exchanges of specific asset classes rather. And they may be subject to some sort of slippage, while the exchanges that focus only on debt or real estate or equities will probably succeed more so in building that reputation with their investors in terms of, you can go to X exchange and see all of the best debt instruments, or you can go to this specific exchange that has all of the early stage startup equities or whatever. I think that that's also an effective strategy to get acquired. It's also something that we saw in the tech bubble in the 2000s, and I don't see it deviating much in this industry, despite the fact that you can trade it anywhere. There will be some generals that succeed, but I think that mostly the most successful ones, they will try to specialize in a specific asset.
Would you say that this is more of the exchanges that go live, the ones that focus will have higher trading volume, or the ones that focus will have a better bid-ask spread for assets? What would you say is your
I think those two things go hand in
Hand in
hand.
hand.
I think that having a high trading volume allows for a lower bid-ask spread. But they may not have the highest volume by asset or whatever, but certainly they will have the most concentrated volume. I certainly think that they will prioritize bid-ask spread, but I do think that volume will be at least in some way correlated with the bid-ask spread for sure.
And that the exchanges that focus are more likely to succeed than the generalists.
I think
next
so.
year.
I think so. I think there's an opportunity for one or two generalist exchanges, maybe a decentralized exchange or something where you just know that no matter what, you're going to be able to exchange this thing. But in the same way that we may see regionalized security token exchanges, even though we don't necessarily need regional jurisdiction, we don't need a U.S. exchange and a Chinese exchange, I do think it's more likely that you're going to see U.S. users participating on a U.S. exchange and Chinese users participating on a Chinese exchange just because that's what you're familiar with, and it's likely going to make more sense that way for those exchanges to do that. But they will be interoperable, as we said. I think that that's always going to be a key, is that they're operating on the blockchain, they're leveraging the same protocols, and it will be an advantage to them to be able to work together.
I think that I'd say we're in line with my prediction that there's going to be 100 different plus types of exchanges in marketplace.
Yeah, absolutely.
I
I didn't give an exact number, but I do feel the same way, that it's not
Yep.
just going to be one or two that dominate. I think finally we're going to see $100 million in infrastructure acquisitions in the security token space in 2020.
Right.
So it's a little bit different than yours in terms of $200 million in funding or raising rounds. I do think that we're going to see some companies that will they will successfully raise capital, and some will do that, absolutely. But I also think that many that want to enter into the security token space may just acquire, because that essentially allows them to kind of fast track their way into the space, whether it's for acquiring licenses like broker dealers or ATSs or things like that, or maybe it's just the intros or the partnerships or many of those other pieces of the technology that they don't want to have to build out a whole nother issuance platform or X, Y, and Z. I do think that we will see acquisitions of many of these smaller firms that maybe weren't able to necessarily stay afloat, and even if it's a successful acquisition that's at a premium, the $100 million number does seem relatively modest, but I think it's good, and I think that many of these smaller firms will kind of conglomerate, if you will, into one kind of again similar thing to regional exchanges in terms of they'll kind of start to conglomerate based off of where they're specializing. So.
There's nothing wrong with early exits, and I hope that's another healthy sign of an ecosystem when you're seeing lots of company raising money and lots of acquisitions and mergers happening. And both those statistics we track in our quarterly reports, so it'll be easy to see just how accurate we are in our predictions on these two.
Absolutely.
It sounds to me, Kyle, that we are a lot on the same page and a little different on some of the other stuff. Like legally, I think I'm very pro the fact that we're going to see some kind of legislation move forward. I'd say it's safe to say you're not very confident that something will happen in 2020, but if it does, that it's going to be something very broad. I think we're both in agreement that there's going to be large private networks, specifically by the institutions and the banks trading debt and fixed income securities and things like that. Makes total sense to me. Very excited. I did not make a specific prediction on what we call sports finance, if you will. And I think that's very cool. It'll be interesting to see if there are any other industries that end up, if there's a competitive platform that ends up coming out, or if that number gets blown away perhaps by the number of contracts that come to market. I'm certainly in agreement with a lot of the other stuff you said regarding rental markets and things like that, leveraging tokenization for sure. I'm a little bit potentially in a disagreement with your mortgage-backed security statement, as there's a big debate in the community regarding how you can actually leverage this, being around the fact that your loans need to be originated from the get-go in order to actually leverage. And so therefore you can't just take an existing basket and start to leverage some of those same efficiencies. So without knowing many other lenders that have been originating on-chain other than Figure, I don't see anybody else next year, that would be my prediction, using securitization other than Figure. And of course, our numbers vary a little bit in the data for the predictions of the market, which is, of course, making things a little bit more interesting for when we do the end of the year review.
Absolutely.
But overall, very much so, more or less expected, Kyle.
Cool. Well, I think that's a
excited.
wrap. That was a
wrap.
healthy episode, and we had a lot of fun talking about our predictions. We'll have to see how that performs in the end of 2020, and I hope that there's many other great positives that we couldn't even see coming.
Absolutely. And again, please let us know, if you're listening, your feedback on our predictions, what you think, where you think we're wrong and right. And of course, if you have your own predictions that you missed, if we think they're worth mentioning, we'll bring them up in next week's episode. So as Kyle said, that's a wrap. Thanks everyone for listening to the first episode of the new year, and I hope to be speaking to you next week.
Talk to you soon.